Welcome to the weekly wrap-up. Of course, I'm Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And what we're going to do today is go over what the markets did this past week and ultimately project out into next week so that we can be ready to trade the charts, right? That's the goal here, to make some money. So first and foremost, this week was filled with a lot of economic data and mainly inflation data. We started the week out with a deal with China and the U.S. to lower tariffs. Please understand that while the markets had a significant rally on that news, it wasn't a trade deal. It was just to lower tariffs for basically 90 days so that the two sides could negotiate. If there's no deal in 90 days from that date, then the tariffs will likely be going back up. Same thing with some of these other countries, right? I think even Europe, we had that tariff knocked down to 10% or so. But if there's no deal now, only about a month and a half left, then tariffs could go up. And again, that makes me very nervous about how fast the markets have rallied. Now, speed ahead to Tuesday, we had CPI data, which showed no major inflation. Thursday, we had PPI data, which also showed no major inflation increase. But the kicker here, this morning, we got export and import prices, which are also a less known gauge of inflation, and those did spike dramatically higher. So again, generally, the markets aren't paying attention to the export-import prices. They're looking at the headline CPI data, but still, us as investors need to be very aware of what all the data is telling us. All right, follow me over to the big board here. Let's take a look at where markets are today. It's another green day on Wall Street. Dow is up 286 points here just before the close. The NASDAQ up 86 on the day, and the S&P is up about 38. So again, really 0.5% to just over 0.5% on the markets today. Oil getting a small bid, but continues to remain below $65 to $66 a barrel. And remember, it's been chopping up and down underneath 65. That's starting to build a bearish consolidation pattern. And remember also, folks, is that if you're starting to make a bearish pattern in oil, what does that tell us about the U.S. economy or the global economy? That should be an indicator. By the way, same thing with copper. Copper has not been strong over the last week or two, which is also an economic indicator. Looking at gold today, down again. We did have one bounce day yesterday. It did come down. If you watched last week on the weekly wrap-up, I talked about major support around 31.50 to 31.20. We came down the last few days into that level and then reversed back up. We're coming back in again, although still above that key support. Now, if that support breaks, we probably go to 3,000 or pierce 3,000. But as I always say, respect support and resistance, in this case support, until it is broken. All right. Now, lastly, Bitcoin. Bitcoin has stayed relatively quiet this entire week. It's essentially doing what we would call bullish consolidation. So again, we've talked about how it's had a great run up, but now it's going sideways, basically stuck between 103 and 105,000. That is of now, as long as we don't break below, I think I have my level at 100,700. As long as we don't get a daily close below that, this is considered bullish consolidation and would dictate maybe a push up to 109,000, which would be back to the double top or the former all-time high. The only thing to keep in mind with Bitcoin and crypto overall, folks, is that it's very clear more and more that it does remain a risk asset, right? So yes, every once in a while it shows glimmers of that safe haven asset that we all adore, that we want it to become, or at least most of us want it to become. But if you look at the low on Bitcoin and the low on the stock market, they both occurred in early April, and they've both had tremendous moves to the upside. And that makes me a little nervous that if the stock market has a big dip again, you have to understand that most likely crypto would take a dip as well. Flipping over to the S&P 500, again, we're up about 0.2% on the day. This is a trend line that I'm following into the weekend. You can see these little pivot lows right here and right through here. So that tells me that there should be some resistance, and that's basically where we are right here. We're coming right into that level for now. So I'm into next week. I'm going to be very watchful of essentially just below 6,000 on the S&P, or just around that even number of 6,000. $1,000. That, to me, that even number is going to be something that we pay very close attention to. If we get through that, then you got to think we do test the all-time highs, folks, which would be, again, the next resistance just above, basically at 61.25, 61.50 on the S&P. All right, so again, just keeping an eye on things. Next week, we'll have a few earnings, but again, less and less of the big names. The only earnings left to come out is NVIDIA, not next week, but the week after, and that will be a huge earnings announcement for the market. Obviously, considering everything that's gone on with the sector, with the overall economy, how much demand for these chips are out there. My guess is it's quite a bit, but it does Wall Street, especially with this run on NVIDIA recently now taking us into the 130s, is it already being factored in? And that's always something that we have to understand is that, you know, they could come out and blow away earnings, and I think they will. But if the stock has rallied 50% up into that print, into that earnings announcement, does it already factor in how great those earnings are going to be? And if they just show any sign of a slight negative, the stock could sell off. And again, that's something I'll be watching very closely. Follow me back to the computer here. Let's take a quick look and see what's going on. So if we flip down to the computer, and let's just go to that NVIDIA chart to keep an eye on it. So we can see very clearly NVIDIA was kind of stalling here, struggling right at this level. And then once it broke through, it's gone parabolic, and that again is coming up into those earnings in about a week and a half when they report. And again, it's gone up, I mean, amazingly now from about $86 a share back to $135 a share. Now, again, today it's stalling. It's not one of the better performers out there. It's only up fractionally on the day, but it's still holding up very nicely. Now, a couple other charts I'm watching next week. Apple. So one of the things that I'm keeping an eye on is look at how Apple's going sideways here, and look at essentially how this here is resistance, right? This high here, and in fact, this line, this trend line even comes out to right here. So that is consolidating below. If Apple can break above this $214 level, you should get one more big push on Apple to fill this gap. Right to gap fill right here at around 224. At 224, I will most likely take a short on Apple. I don't have any positioning on Apple right now, but that would be significant resistance on Apple, and I would look to take advantage of that on the short side. Another one of my favorites is this chart of JP Morgan Chase. I love showing it because, in fact, I'm going to go over to the big board for this. So follow me back to the big board, guys. Let's take a look at this. This is a very cool chart, and the reason it's a cool chart is it shows you how support, former support, which was here, 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 and here, and even somewhat here, right? It just didn't quite hit. But once it broke, this now becomes resistance, and then look at what happened. We had this monster fall, massive rally back up, but look at what it just ran into. And so as a technician, I look at that and I say, okay, well, I'm not trying to reinvent the wheel or use any crazy calculus to figure things out here. I just use common sense. If it was support here and it kept on bouncing and now this broke, it went up here and shows me that it has power on the other side. Essentially, it's now resistance. So now it's even more extended in the short term. What's the probability of a pullback here? And for me, at least, the probability probably about 70%, maybe 75%, that we get some sort of check back. Now, again, it's not to say that we're going to go down here. Who knows if that's going to happen? But is it highly probable that we have a retrace of, let's say, 10% after this huge 30+% move up? And I would say that is a good probability based on simple technical analysis. All right, back to the computer we go here. As we come on over. One other chart I know you guys love to look at is Tesla. Let's go to the computer here and see what we have. And on Tesla, guys, Tesla could still go higher. I'm not willing to look at a short just yet. Granted, I'm not long either, but I have this really good level here at around 378 that if we get up, see this low, how it bounced, hit, bounced, hit here. If we zoom in, look, it hit, bounced slightly, and then broke. And so same kind of deal as we were looking at JP Morgan with, is that this was support, it broke, so what do we expect if price comes in here? I would expect price to be rejected off of that level right there, so it goes up into it and pulls back. Now listen, is there a chance it doesn't get up there? Sure there is, but if it does, as a trader, I have to be prepped for what type of action I'm going to take, and that would be a starter short position for a pullback. And same thing, again, you're not looking to reinvent the wheel. It's not necessarily, I don't have to see it going down to new lows. I just would look for a retrace to this former resistance, which now on the other side becomes support. And you could even buy that right there. Buy it. That would be technical support. All right, let's go to Bitcoin real quick here. If we go to our daily chart on Bitcoin, we can clearly see it's just gone to sleep. I was actually looking at this earlier with members of my Smart Money crypto service. Bitcoin from the low in early April, where we had this up move here off of 74,000, there have been 6 days for Bitcoin in this whole move, which has now been 5 to 6 weeks, that have resulted. So 6 total days that have been the majority, basically 95% of the entire move. In fact, let me run over to the big board to look at this. Follow me over here. So this is kind of just crazy, and it just shows you how trading can be, you can have periods where there's a lot of volatility, where every day it's a big move one way or the other, or you can have charts like this, where literally here's one day, right? So there, and then here was kind of an inside bar, so I'm not even going to count that, right? So let me see if I can get my eraser on this. There we go. But really, this would be your second day, and then it goes sideways. Third day, fourth day, and then it goes sideways. Fifth day, sixth day. So you guys see what I'm saying here? Is that the entire move from 74,000 on Bitcoin to basically 105, 6 trading days. 6 trading days is what the majority, that almost the entire move occurred in 6 days, with all the other periods being like basically sideways chop. And it's just interesting to kind of see that and realize it. I mean, it's a great move up, but this is the way, at least for now, Bitcoin is behaving, where it goes for a couple days and then it just goes sideways for a long period, and that's what we're doing here. And that is fair. In all fairness, it's very similar to here, which is very similar to here, which in general we surmise, we rate by probability, favors a move there. This would be your double. You can see the white line there. I have it cut off there, but that's your all-time high at 109. That would be your next resistance. Now, do I think Bitcoin eventually pulls back significantly? I do, but it would have to coincide with the stock market, right? All right, back to the charts for just a couple more before we end this show today. And if we go to gold again, guys, I've talked to you guys about this. This was my downside target. We tagged it. Doesn't mean it can't go lower. I have to watch to see what this price action is doing. If it starts to make a bear flag like this, well, then it could break through and go to 3,000, which would be down at this pivot low and this pivot high. But as of now, I respect that support until proven otherwise. But again, watching very closely. I don't have any longs or shorts on gold right now, just a wait and see. Now, I will say this, guys. I did start a small long position on silver today. I like this consolidation, looking for a breakout here. Again, it's only a starter position on silver, but I am keeping an eye on it. This looks like good consolidation. Let's see if we can get a breakout next week, but I am slightly long, just an ever so tiny toe in the water long on silver. Next up, here's your oil chart. And so again, we've talked about this and how this was major support on oil all the way back here. We got the breakdown, the bounce, the pullback, the bounce. Again, just chopping. No trades here. We haven't gotten up into major resistance. If it does, yeah, I would consider a short up here. But overall, this pattern, if it continues on for another couple weeks or a month, that would start to put in a bearish flag pattern that would eventually break down. And that's the angle I still see on that chart. And then lastly, look at the beauty of this chart here, guys, on natural gas. You had your support, and then it broke, retraced into resistance. So let's flip that arrow around. Resistance. And what did it do this week? Hit resistance and 2, 4, 5 sell days in a row to the downside. So listen, when all is said and done, the markets continue to really be strong in regards to the stock market. Crypto has been it's been ebbing and flowing, right? It kind of pops and then it goes sideways for a long period of time. But the stock market has been abnormally strong. 30% upside is what we've seen now on the NASDAQ from the April 7th low, and it's only May 16th, right? So that is an incredible V bottom. The question is, are people buying into the buy the dip mentality because of the COVID V bottom and the V bottom from last August where we went right back? Is it a false flag, if you will, that institutions are throwing out to us to try to make us think that this is going to be the recovery, all while selling into it, knowing that maybe a recession is later this year? The key is, let's watch these levels. If we watch the levels and we eclipse one level, well, we have to look at the next level. Ultimately, my focus now is starting to turn towards that all-time high. If we get above that all-time high and confirm, listen, that's a full bear bull market back in play. But I'm still skeptical based on negative GDP last quarter. We still have 30% tariffs on China. Walmart just said yesterday they're raising prices because of tariffs. Walmart obviously has tons of products in their stores that people are buying, so that's inflationary. Import prices went up. Jobs are still staying relatively good, but what do we know about the jobs report? Every month, the last jobs report gets revised down by 40,000 jobs or so. And so, again, you have to take it with a grain of salt. So, essentially, just to summarize, I remain very skeptical. It's been a great rally. I caught some of it. I've started to slowly short now up in this range. I, of course, will keep you guys posted, as everyone will here at Verified Investing. And with data and charts, no hype, no nonsense, no narratives, just what are the probabilities? That's what we're here to do. You guys have a great weekend. Thanks so much for tuning in. I'll see you next time. Take care.